More breaking news for you. America's retaliatory strikes against Iran ongoing after the regime again attacked commercial vessels in the Strait of Hormuz.
A U.S. official telling Fox targets include air defense systems, coastal surveillance systems, surface-to-air missiles, anti-ship cruise missile sites, drone launch sites, and port facilities inside Iran.
The retaliation extends beyond military action. The Department of Treasury revoking a key waiver as part of the Memorandum of Understanding that had authorized Tehran to produce, deliver, and sell oil on the open market.
Crude prices jumping on the news and raising new questions about the future of the peace deal. Here to react, former Energy Secretary Dan Brouillette. Good to see you, sir. Okay, your reaction to both of those pieces. You've obviously got the strikes on Iranian assets that have just happened. You have the revoking of the waiver as well. It's a 1-2 punch, military and economic. Is this going to get Iran's attention?
Oh, I think it will. I think it will indeed. Thank you for having me. It's good to see both of you. Look, I think the message here is very, very clear. And it's a good lesson to learn. We saw this in the Biden administration where you gave the money up front and you learn pretty quickly that it's very difficult to claw back. So I applaud the action of maybe putting these sanctions back on or restricting their ability to sell oil in the open market. Now, that is going to have some effect on price, and we saw it today, a 5% jump or so in the Brent. But look, $72 a barrel is a long way away from $100 a barrel, which is where we were earlier this year. So it's the right message to send to Iran. They do not have the leverage they think they may have over the Strait, and it's important that we send this message clearly.
Well, the narrative among energy investors and among the energy market has shifted to there's a glut of oil that's coming. Even OPEC Plus added another 188,000 barrels a day to its August quotas, and enough oil has started flowing out of the Persian Gulf via the sea or through the Strait of Hormuz, and then you got pipelines and other routes that the market is very well supplied, that we can take the Iranian oil off the market because, frankly, China wasn't buying it anyway.
Well, that's absolutely right, Dagan. So, your point is well made. This is not really a production issue anymore. I mean, we have a lot of oil in the marketplace. Our challenge now is logistics. It's getting it where it needs to be. And that's the importance of this choke point called the Strait of Hormuz. You can literally stop the flow of oil, which affects the traders and affects the supply in the marketplace. But it's not a production question any longer. We know how to produce oil. Our shale producers here in the United States can ramp up very, very quickly. They can go down very quickly as well. Our challenge now is infrastructure. How do we get the pipeline capacity we need? How do we develop alternatives to these choke points that we see around the world? That's our challenge.
Moving on to this, the United States oil safety net is sitting at a 42-year low.
The Strategic Petroleum Reserve falling to just under 320 million barrels, the lowest level since 1983. Energy Secretary Chris Wright now saying it's time to start filling the tank back up.
That'll happen over the next 24 months. As we're releasing this oil right now because of these flows, we're not selling any of these barrels, we're trading them. We're bringing a barrel out today to get 1.25 barrels back next year sometime. Very different than the Biden administration that sold the barrels to drive down gasoline prices and drained it. We're just borrowing barrels and replacing 1.25 barrels for every barrel we take out.
Okay, so the structure's different here, but how fast can you get the thing filled back up? Is like a next year timeline good enough right now?
I don't think you're going to reach the levels, the maximum levels, roughly 720 barrels in a year or two. Look, the way the Strategic Petroleum Reserve works is that it comes out like a fire hose because it's under pressure, but it goes back in like a garden hose. It takes a very, very long time to do that, and it's simple physics and it's pipeline capacity, putting that oil back in. The exchange mechanism that Chris is talking about is something that was created in 1975. That's the way the program was designed. You basically exchange the barrels of oil with commercial producers, and they pay interest when they put it back in. So you take a barrel out, you put a barrel and a quarter back in, and that's how you refill it. But we're talking about physical capacity, and it just takes a longer time to fill it than it does to take it out.
What about oil prices in the short run? Dan, I was filibustering a little bit, but can we, can we handle any crude that comes off the market if we have to really begin to fight the fight against Iran again?
Yeah, I think we can, Dagan. We really can. I mean, again, our shale producers are very, very efficient. They can ramp up very quickly. Our challenge is, as I said earlier, though, it's getting the pipeline capacity we need to get it to the markets, get it to the water, get it to the export facilities that we have in the U.S.
All right, Dan Briette, thanks for your expertise as always. Good to see you tonight.
Good to see you. Take care.
Catch Big Money.